Please go ahead.
Can we start, Akash ji? Akash ji? Okay, we are starting. Chairman sir, you can start.
Good evening. We welcome you all to this virtual CPE meeting on voluntary liquidation process under IBC, important aspect organized by the Committee on Insolvency and Bankruptcy Code of ICAI. Today, we have with us C.S. Sri Priya Kumar ji, who is the Vice Chairperson of the Committee on Insolvency and Bankruptcy Code of and she is also the Chairperson of Corporate Law and Governance Committee and Women Member Empowerment Committee. We too have with us C.A. Preeti Savla ji, the Vice Chairperson, Corporate Law and Corporate Governance Committee, also Vice Chairperson of Women Members Empowerment Committee and Sustainability Reporting Standard Board. Then we have C.A. Avil Menezes. He is the insolvency professional and a chartered accountant. Avil, as an avid speaker, he will be taking the session today, and the session will be moderated by the Central Council member Preeti Savla ji. The primary objectives of the Insolvency and Bankruptcy Code is to resolve the insolvency corporate debtors and prevent it from going into the liquidation process. However, in certain circumstances, the liquidation process is unavoidable. In that scenario, the code and the regulations thereunder provide for the process of the liquidation to enable orderly exit. There are times when the corporate person would like to voluntarily liquidate itself, and if it has not committed any default, it can apply for the voluntary liquidation process under the IBC. Looking at the importance of the liquidation process under IBC, the Committee on the Insolvency and Bankruptcy Code of ICAI has recently brought out an easy to understand handbook on liquidation process and voluntary liquidation process under the IBC. Along with this, the other handbooks have also been brought out on important topics under IBC like moratorium, resolution plan, personal guarantor to corporate debtors, corporate insolvency resolution process, claims, do's and don'ts for IPs, and pre-packaged insolvency resolution process. The company has also brought out the FAQ on IBC in collaboration with the IBBI, the Insolvency and Board of India. Considering the professional opportunity under the code, the committee has launched certificate course on the Insolvency and Bankruptcy Code 2016 in online mode for its member. So far, the committee has already conducted 3 batches and the next batch will commence soon. We will also plan to have this certificate course in physical mode too now, as the COVID looks to be going. I do not know. In some of the state, again the cases have started, but we are hopeful that it will not create so much of the problem, and we will be again in the physical mode kind of things. Friends, beside organizing these kind of VCMs on important and emerging topics under the IBC, the committee is also bringing out IBC case laws updates on a regular basis covering important cases, analysis based on the decisions by Supreme Court, High Court, NCLT on issues under the Insolvency and Bankruptcy Code 2016. The same have been hosted on the committee's page on ICAI website. The committee also organizes VCM on case studies of successful resolution and cases at IBC. And let me tell you, friends, the Sri Priya, who is the Vice Chairperson of the committee, he is taking lead from front in the various suggestions which are required to be made to IBBI with respect to changes which are going to take in the Insolvency and Bankruptcy Code. We are having group of around 24 persons which are being led by her in the meetings, and we are in a position to send our suggestions to the IBBI and Ministry of Corporate Affairs whenever it is being asked. The Preeti Savla is also an insolvency professional, so when she will be moderating, you will also have the touch of practical experience from her. So with this, I thank you all, and I must tell that Rita is the person who is the secretary of the committee, who is doing a lot of back office work, and she is the backbone for the committee for doing a lot of activities in the committee. With this, I thank you all and wish that this session on the liquidation process is going to help you all, because today there are challenges in all respects, especially to the chartered accountancy profession, to the insolvency profession. But how it is to be done effectively by us, how we need to be transparent, what kind of care is to be taken. I think as far as the liquidation is concerned, today Mr. Avil Managers will be dealing with the subject. With this, thank you once again to one and all. And now I request Sri Priya, Vice Chairperson of the committee, to say few words.
Yes. The Chairman of the Insolvency Committee, CA Durgesh Kabra, CA Ms. Preeti Savla, the Vice Chairperson of the Corporate Laws and the Women Members Empowerment Committee, the Speaker of the Day, very, very exemplary professional, CA Avil Menzies, and the Secretary Rita, and to each one of you who's there in this program here today. Here's a very, very hearty welcome to all of you to this program on voluntary liquidation. So at the outset, I must mention that it's a complete pleasure to work with somebody like Mr. Durgesh Kabra as his Vice Chairperson. One thing that I really liked is the way he goes about inviting people to participate in the policy suggestion process of the Institute. This was a huge learning for me when I saw that he had set up a 25-man group to help in getting inputs for the various papers that come out. We had one roundtable on the IU regulations. We had another roundtable earlier on the other paper that was proposed, and now there's a third roundtable on the delays in the process. So I think this kind of a participative approach helps us to get a very broad-based support. So I did something very simple. Since I couldn't think of it, I just borrowed a leaf from Durgesh Bhai's book. And we now have the Corporate Law Committee report, a very, very large report that was presented before us for our suggestions. So we sent out invites to about 90 people, and we've had participations in 3 roundtables. The last roundtable is today at 4 p.m. So I have to kindly excuse myself and I seek your indulgence. So just learned that it's not necessary to invent the wheel. You just need to borrow it from people like Durgesh Bhai. And I think whatever I have come up with as suggestions, when I send him a message at 9 o'clock at night saying, Durgesh Bhai, we must do this, he says, please do it. So for me as a vice chairperson, I find it extremely nice that, whatever I suggest on the technical side, it's sort of absorbed very quickly. So thank you, Durgesh Bhai, and hope to learn a lot from you. The second important thing is about voluntary liquidations themselves. I think the government is very aligned to a principle. You must make exits as easy as you make entries. So if you've got a seamless process of entry, there has been consistent view that's been developing saying that the exits also have to be seamless, and the voluntary liquidation is one such provision. I'm sure Avil ji would kind of cover this as well, but I noticed that there are only 2 challenges in this process that I have been able to come across as a voluntary liquidator. The directors meeting, the solvency, perpetually this assets getting sold, everything is fine until we go back to the tribunal with an application, and then there is a delay. The second aspect, of course, has been the huge challenge that we've had with income tax. A lot of assessments are pending, and when we give a public notice, there is really not much response. So a liquidator is always very tentative whether you can go ahead and liquidate everything else and dissolve, or you have to wait for these orders. Now, this acquired one more layer of complication because all the assessments became e-assessment. Now, while for an Indian company, we were happy, MCA, of course, came out with a very, very good circular. The IBBI came up with a very good circular in November 2021, saying that an income tax clearance is not mandatory. However, my own personal experience has been that for a company which is a domestic company, we don't seem to have that issue. But when I'm liquidating an entity which is the subsidiary of a foreign company, and it has been subjected to transfer pricing, etc., then one as a liquidator is not very comfortable, just not taking care of those liabilities. Because two things emerge. One is if they want to come back into India at a later date, there should not be any negative on them. So as a liquidator, you tend to take extra care. And two, of late, we've also had requests from the department asking us to give a director's indemnity. Director of the parent to be giving an indemnity. We thought it was a shorter route and some of us have taken it. So we also look forward to Mr. Avil's view on the matter. And to the chairperson of this committee, Shri Durgesh, maybe we should actually go back and represent to IBBI to actually clarify if a liquidator has to give such indemnities, because some of the bankers also insist on tax clearance for repatriation of the final funds. One more aspect that Avilji may want to clarify on is whether FCTRS has to be submitted by a liquidator, because this does not mean I'm issuing share capital. I'm only repatriating the funds. This has also been a certain amount of challenge that liquidators have been facing. So presenting these three aspects before Avilji, and I'm sure Preeti would do a terrific job of the moderation, being a subject matter expert herself. Thank you very, very much for this opportunity, for letting me share my thoughts, and thanks once again. Thank you, sir.
Thank you, Shri Priya. May I now request CA Preeti Savala, who is going to moderate also and to introduce our speaker also. So over to Preeti Savala, the Central Council member and Vice Chairperson of the three committees, and a very active member from the Western region.
Very respected Chairman of Insolvency and Bankruptcy Code Committee, the Central Council member, CA Durgesh Kabra, Vice Chairperson, CA Shri Priya Kumar, today's speaker, CA Avil Manages, and all participants. A very good evening to all of you. So I am seeing a lot of activities has been planned by Mr. Durgesh Kabra this year for this IBC committee, and earlier years also I have seen that. We have discussed a lot about the CPE credit by IBBI, as well as I have been informed by Durgesh Bhai about organizing the residential refresher course also on IBC. So I think with this initiatives, the members' knowledge will keep updated, as well as they will enrich the knowledge, and there will be a lot of value addition to the knowledge. So congratulations, Durgesh Bhai, for doing all these activities under your leadership. And as Shri Priya Madam has said, these are the the abilities and the leadership of the people like Durgesh Bhai, and what we have done also while being heading the region in the Western region to make the group. So at that time, whenever we had to submit our response to any of the exposure draft, you used to make this kind of group. And the same thing with the experts. Now Durgesh Bhai is taking it further, and this is really a great learning for others also. So great, Durgesh Bhai. Again, coming for today's topic on voluntary liquidation. So friends, over the last 5 years, since the implementation of this IBC, several developments have been taken place, and code is continuously evolving to cater to the emerging issues. And the code has been amended time to time, and the regulations thereunder were also amended in smooth implementation of the code. And we all know that code provides for various processes under IBC, and today our discussion will be on a very important process, that is the voluntary liquidation process. covering its important aspects. A corporate person who intends to do liquidate the voluntarily and has not committed any default may initiate voluntary liquidation proceedings under the provisions of the code after fulfilling some conditions provided thereunder. This voluntary liquidation, if the assets are there in the balance sheet in the company, so then he can opt for this. Various other conditions are there, which Mr. Avil manages will take into detail. And I will briefly introduce Mr. Avil manages. He is a fellow chartered accountant with a master's in commerce degree and registered insolvency professional, having more than 18 years of experience in handling large and complex transactions by resolutions and liquidations under IBC 2016. He is regular speaker on various forums on IBC matters. I recollect those days in 2016-17 where this IBC has been, this code has come into place, and we have done lot of programs, courses, 5 days courses, so that this chartered accountants can be prepared for giving the exams under IBC. And the contribution of Avil manages along with other faculties was immense, and we must have done trained more than 200 members, what I recollect during those time in 2017. And till then, his contribution for the members, for the institute is really great. So thank you, Mr. Avil, for accepting our invitation from Committee on IBC of ICI, Institute of Chartered Accountants of India. I am 100% sure your knowledge will really add the value to everyone's knowledge. Thank you very much, and I request Mr. Avil to please take up.
Yeah, thank you. Thank you, Preeti ji. It's always a pleasure to be a speaker on the forum, especially being a chartered accountant. When your alma mater calls you for sharing your knowledge, is always very satisfying. And thanks to the Committee on Insolvency and Bankruptcy, and especially the Chairman, Mr. Durgesh Kabra, the Vice Chairman, Shri Priya ji, and the committee member, Preeti ji. Thanks a lot for inviting me. And I think with this, Rita ji, I can start my presentation.
Yes, sir.
Yeah. So is the presentation visible, ma'am?
Yes, sir. Yes, sir.
Yeah. Thank you. So good evening, everyone, and welcome to today's topic, voluntary liquidation process under IBC. As the chairman on the Insolvency and Bankruptcy Code, as well as the vice chairman and Preeti ji, the member, has already introduced IBC. I mean, it's one of the most, I would say, one of the path-breaking economic legislations which has been done by the government, which came in 2016, and over the last 5 years, I believe a lot of action has happened on the insolvency and the bankruptcy space. Yes, this country needed this sort of a legislation. It's gone through its various challenges, ups and downs, but at the end of the day, a lot of resolutions have come in, a lot of liquidations, I would say timely liquidations have happened. At the end of the day, whether it's a forced liquidation or a voluntary liquidation, the company would have come to the end of its life, and the assets will have to be freed for economic purpose so that willing entrepreneurs can come and utilize the asset to its maximum best and possible economic use. So today's topic is on voluntary liquidation. So essentially, voluntary means these are companies which have not defaulted. Of course, the companies may have debt, may not have debt. The companies may have completed the purpose for which the company was incorporated, or the LLP or the corporate person was incorporated by the promoters. And after having achieved the objective which was mentioned, which was there in the articles of association of this company, maybe it's time to voluntarily wind up. Maybe the promoters are no longer interested in continuing this business, and the business would have come to a stage where they need to wind up this company. So under IBC, it's a very smooth process as far as voluntary liquidation is concerned. we will go through various aspects of the code, especially section 59 of the insolvency and bankruptcy. It's a single section in the code which deals with the voluntary liquidation process. And thereafter, there are regulations which have been made by the IBBI, which is the board as far as the insolvency and bankruptcy code is concerned. IBBI is the regulator. So the regulations are also in place, and we will also take you through some of the statistics which have been recently published by the board with respect to voluntary liquidation. Almost 50% of the cases which have been initiated till now have seen a closure, and the remaining cases would be under closure. So I'll also take you through the statistics. And as was earlier voiced by some of the members on the various challenges which are there as far as voluntary liquidation is concerned, I'll also take you through some of the key aspects in the voluntary liquidation process. So with this, I would start my presentation on the introduction. So as I've already mentioned, the provisions for liquidation has been consolidated under a single provision, that is section 59. So earlier section Companies Act 2013 also dealt with voluntary winding up. The Companies Act 1956 also dealt with voluntary winding up, but under IBC, voluntary winding up is under section 59. It has substituted section 304 to 323 of the Companies Act 2013. And the regulations as far as the voluntary liquidation process is concerned, they have been notified by the Insolvency and Bankruptcy Board of India, IBBI, with effect from 1st of April 2017. So this is about the introduction as far as the voluntary liquidation process is concerned. It's open for corporate persons under the code, which includes limited liability companies, limited liability partnerships, or any persons which are incorporated with a limited liability. So the code has envisaged that a voluntary liquidation process would end up very fast. It is a process under which the adjudicating authority, which is the National Company Law Tribunal, has minimum intervention. So initiation of the voluntary liquidation itself has been entrusted with the corporate person, that is with the shareholders and the creditors and the directors of the company. They can decide the stage at which the company can be wound up, and the process has been laid down under the code and the regulation. There is no need for intervention either by the adjudicating authority at the time of initiation of this voluntary winding up. Unlike a forced winding up where companies which have defaulted, which obviously go through a corporate insolvency resolution process, because the preamble of IBC is very clear that this is a code for reorganization resolution of corporate persons. So once a CIRP starts on default committed by the company, the petition has to be admitted by the adjudicating authority. Once it goes through the petition, if the CIRP is successful, the company is successfully resolved. Otherwise, it goes into forced liquidation. However, at all points of time, you have a committee of creditors, you have the adjudicating authority during the CIRP process, and in a liquidation process, you have a stakeholders consultation committee. As opposed to that, in a voluntary liquidation process, since this is a company which has not committed any default, the government has thought fit that a very simple and a transparent process will need to be set in place so that the companies can get an easy exit. However, having said so, I mean, there's not much in terms of the assets or the liabilities or the verification of claim or even sale of the asset. However, where the process gets stuck, sometimes unfortunately, is in terms of compliances. You need to have all compliances in place because there is no relaxation whatsoever in this process as far as compliances are concerned, because this is a solvent company. So any compliances which are pending will have to be done. Of course, the regulator has issued a clarification that you don't need a no objection or a no due certificate from statutory authorities, mainly income tax. We will come to that later. I've covered that also in my presentation. However, another important aspect apart from compliance is the assessments which are done by various statutory authorities, which obviously is a time-consuming process. Secondly, apart from the assessments, there are also litigations Now, one of the companies which went into voluntary winding up, the process had to be suspended because there were several litigations against the company. So to sum it up, voluntary winding up, given the process of entry and exit is easy. However, it may be marred by issues related to assessments which are pending, assessments which may get challenged at the next level, and also litigations for which neither the corporate person nor the liquidator have no control. So we go to section 59. So what I've done in the next couple of 3-4 slides, I have enumerated what section 59 says. This is the only section in the entire insolvency and bankruptcy code which deals with voluntary liquidation. However, there are enabling sections from section 35 to 53 which deals also with forced liquidation, and they also apply to voluntary liquidation proceedings in as much as power duties of the liquidator are concerned. So section 49 provides for initiation of a voluntary liquidation proceeding by the corporate person. That means the company has not defaulted on any debt or due to any person. So there is no default. So the prima facie thing to enter into a voluntary liquidation is there is no default. A company may also choose to wind up voluntarily under several circumstances, including winding up as a result of expiry of the period of operation fixed in its constitutional documents. For example, this was a company which was a special purpose vehicle which was incorporated maybe for construction of a road project, and once the construction of the road project has been there, probably there would be some rights associated with the particular asset that could have been sold off. Once that is over, as a part of the constitutional document itself, the company was incorporated for a specific period, and since the period of operation has ended, the corporate person may choose to voluntarily wind up the corporate debtor. Occurrence of an event provided in the constitutional documents for dissolution. So there may be certain events which would be provided in the constitutional documents which may lead to dissolution of the corporate debtor. For example, the loss of a KMP or of a loss of the entire business, or events which would at the end of the day culminate for a closure in the business. So the first is expiry of a period. Second is in terms of occurrence of the event for which the company was formed. This may also lead to dissolution. So to sum it up, it's a company which has not had any defaults. It's a company which is able to pay its debt. It can be wound up either if the expiry of the period is over or any occurrence of the event based on which it would go for dissolution, or the members themselves may choose to wind up the company. So what is the procedure to follow? The procedure is largely not very similar to insolvent liquidation, but the processes which follow after the initiation are largely which is followed for an insolvent liquidation. To initiate this process of voluntary liquidation, the directors of the corporate debtor, they have to provide a declaration of solvency. So the first important step is for the directors of the company to provide a declaration of solvency. This would mean that the assets of the company are sufficient to pay off all the liabilities. So when I say liabilities, I would also include contingent liabilities, pending assessment, any contingency on account of any litigation whatsoever. So every sort of liability will have to be detailed and dealt with the directors when they are providing this declaration of solvency. And they also have to give a declaration that the company is not being liquidated to defraud any person. So the directors will have to give two things: a declaration of solvency, and a declaration that the company is not being liquidated to defraud any person. So this particular declaration has to be accompanied by the audited financial statements, because after this declaration, it will have to be passed in a members meeting, and thereafter if there are any creditors, it will also have to be passed in a creditors meeting. So the declaration has to be accompanied by the audited financial statements of the company and the record of business for 2 years, or if 2 years have not passed, from incorporation, whichever is later. So along with the declaration of solvency and the declaration that we are not winding up the company to defraud any person, the directors will also have to give the audited financial statements of the last 2 years, including the records of business operations. Along with the audited financials, in terms of compliances, a report on the valuation of the assets of the company, if any, prepared by a registered valuer. So if there are immovable assets, if there are certain assets, the value of which may not be ascertainable on the face of the balance sheet, then obviously you will have to get the valuation also done. This is also as far as the compliances which are a necessary part of Section 59 of the Insolvency and Bankruptcy Code. So within 4 weeks of this declaration, a resolution will have to be passed. A special resolution of the members of the company in a general meeting will have to be passed to initiate voluntary liquidation. They will also have to appoint an insolvency professional to act as the liquidator for the company. So within 4 weeks of this declaration, you will have to call for a members meeting, provide all the documents to the members, and pass a special resolution in a general meeting. Or you can also pass a resolution, which is an ordinary resolution of the members in a general meeting in favor of the voluntary liquidation if the liquidation is as a result of expiry of the period fixed by the articles or an occurrence of any event of which the articles provide. So there are two situations. One is a special resolution if the liquidation is not done on account of the clauses which are there in the constitutional documents of the company, which is the article of association. So if there are no clauses in the article of association and the company and the directors would want to liquidate the company, then you'll have to pass a special resolution. Otherwise, you can pass a ordinary resolution. Now, this particular resolution will have to be passed within 4 weeks from the declaration given by the directors. Now, coming to the aspect of members have already given a resolution, what if the company owes any debt? So in case the company owes any debt, it is even the creditors who will have to pass a resolution in a creditors meeting representing 2/3 in the value. So this is what they have to do within 7 days of the members passing such a resolution. So once the members have passed a resolution, if there are any creditors, you'll have to call a creditors meeting, 2/3 in value of the debt. They will have to approve the members' resolution within 7 days of such resolution. Once this is done, so what is the liquidation commencement date? If there is a company who has no creditors, then the date on which the members pass the resolution when it is voted through, that is the liquidation commencement date. Even if there are creditors in the company, the liquidation commencement date will still remain the date on which the members vote. However, as a formality, Section 59 says that the creditors will also have to approve this 2/3 in value. In case they reject it, you cannot continue with voluntary liquidation. Once both the meetings have been done, the company shall notify the Registrar of Companies and the IBBI of the approval of resolution and even the subsequent resolutions, if applicable, within 7 days of such approval. The voluntary liquidation proceedings shall be deemed to have commenced from the date of passing of the shareholders' resolution, subject to approval of creditors, if any. I again repeat, the liquidation commencement date will be the date of passing of the shareholders' resolution. Now, Section 59, subsection 6 says that the provisions of Section 35 to 53. So this deals with normal forced insolvent liquidation proceedings. So it starts from Section 33 to 53. So it leaves 33 and 34, but it says Section 35 to 53 shall deal and apply to voluntary liquidation proceedings with such modifications as may be necessary. So once you have initiated the process and the affairs of the corporate person have been completely wound up, that means you have closed down the business, you've sold the assets, realized the assets, paid all the liabilities, then the liquidator shall make an application to the adjudicating authority for dissolution of corporate person. And the adjudicating authority on such an application by the liquidator, he shall pass an order that the CD shall be dissolved from the date of that order, and the CD shall be dissolved accordingly. So once you sell all the assets, pay off all the liabilities, and the affairs have been completely wound up, you make an application to the adjudicating authority. The adjudicating authority shall review the application, and if they are satisfied, they will pass an order that the corporate debtor stands dissolved. Such a dissolution order will have to be sent within 14 days from the date of such order. It shall be forwarded to the authority with which the corporate person is registered. So in effect, it has to be sent to the register of companies where the corporate person is registered. So this is in terms of section 59 in terms of voluntary liquidation. Are there aspects in terms of avoidance? So once the directors have said that there is no fraud as far as in the company, even the liquidator is duty bound to look at sections of avoidance transactions. So this is section 43, which is a preferential transaction, section 45, which is undervalued transaction, section 50, which is extortionate credit, and section 66, which is a fraudulent transaction. So even those investigations will have to be done by a liquidator, even if it is a voluntary liquidation process. So I'll move on in terms of the data, in terms of the IBBI newsletter. So the last quarterly newsletter as on 31st of December 2021, it says 1,115 corporate persons have initiated voluntary liquidation. So for over the last 5 years, we have 1,115 corporate persons who have initiated voluntary liquidation, and final report in terms of 546 voluntary liquidations have been submitted. So this means that these processes have been closed and they are at various stages at the adjudicating authority, wherein a final order would be passed soon. And 10 processes have been withdrawn as on 31st of December 2021. So section 59 does not talk about withdrawal. It only talks about initiation. It does not talk about any withdrawal. The regulations which have been framed by IBBI does not talk about withdrawal. However, there has been a discussion, a draft discussion paper in the public domain where public comments have been sought by IBBI on withdrawal and how a withdrawal, if at all, has to be permitted. So 10 processes have been withdrawn as on 31st of December 2021. Any withdrawal would need the approval of the adjudicating authority. So it may so happen that if the assets are less than the liabilities, then the liquidator in one case has applied for suspension of the winding up process. In some of the cases, the corporate person themselves said that we are again looking to revive the business. Probably situations have changed because business is a dynamic scenario. Maybe the promoters and the directors would have thought fit that this company need not be wound up at present. So in those cases, they have also applied to the adjudicating authority for withdrawal, and in 10 cases, the processes have been withdrawn. So this is just a chart on the commencement of voluntary liquidation. So if you see from March 18, March 19, 184 right up to 1,115, so that has been the progress in terms of the number of corporate debtors where voluntary liquidations have been initiating. Now, in terms of the balance liquidation proceedings, 559 voluntary liquidation proceedings is still continuing. Almost 34% have been for greater than 2 years. So greater than 2 years, almost 34 cases are yet to be closed, even though they would be at various stages as far as the initiation and the liquidation process is concerned. Greater than 1 year, less than 2 years is 18%, and so largely 50% have crossed the 1 year benchmark as far as filing the final report is concerned. So when IBBI tracks this, it tracks this on the basis of final reports which have been submitted by the liquidator, because as an insolvency professional, anything that you file with the adjudicating authority will also have to be served upon the insolvency and bankruptcy board. So another statistics on which companies have opted for a voluntary liquidation process. So it says that most of the corporate persons are small entities which are looking for voluntary winding up. 599, almost 600 of them out of the 1115 have a paid up capital of less than 1 crore. Only 122 of them have a paid up capital exceeding 5 crores. So as was rightly envisaged by the legislation makers on the companies which may come forward for voluntary winding up. These are typically small companies where either they have completed the business, completed the period for which the business was set up, or the business would have wound up, or they are no longer interested in the business. So this provides a very safe and a smooth and a transparent mechanism for exit to all small MSME companies. Only 122 had equity capital exceeding 5 crore rupees. So just to give you a number in terms of paid up capital of all these 1105 companies is 6,683 crores. So this is the kind of capital which was there, which is now being freed up. So either it goes back to the creditors or it goes back to the shareholders, and they can invest this money somewhere else. So that's the kind of money which has got freed up on account of voluntary liquidation process. In terms of the reasons, so even the regulator has collected the reasons for these persons for initiating voluntary liquidation. So if you see 71%, a large chunk of them says not carrying any business operations. So these were dormant companies where businesses had been closed down. There may probably be no intention to continue the business further. So 70% of the businesses which closed were not having any operations. 14% were commercially unviable businesses. Maybe the business was started, but the environment in which the business operated probably made the business commercially unviable for the promoters. In 2% of the cases, the promoters unable to manage the affairs, and in 3% they are saying the purpose for which the company was formed was accomplished, or the contract for which the company was set up got terminated. So these are some of the reasons, but by and large, the businesses, 71% were not carrying any business operations. So it is but wise to allow them a very smooth entry out of the company. Now we go to the regulations. So one is Section 59, which is a part of legislation. One is the regulation which the Insolvency and Bankruptcy Board of India, which is IBBI, in accordance with Section 240 of the code. This is a delegated legislation where IBBI has been empowered to make regulations to carry out the various provisions of the code. So I'll quickly run through some of the key definitions. It talks about a contributory. Contributory means either a member of a company who is a shareholder, a partner of an LLP, or any other person who is liable to contribute towards the assets of the corporate person in the event of its liquidation. Liquidation commencement date means the date on which the proceedings for voluntary liquidation commence as per Section 59, subsection 5. I have already clarified this. The day on which the members pass a resolution, that is the date on which the liquidation is commenced. There may be a creditors meeting thereafter, but the creditors meeting is only a confirmatory meeting. It may either confirm or it may not allow the voluntary liquidation to go forward. Corporate voluntary liquidation account. So corporate voluntary liquidation account, so all the assets of the company are realized by the liquidator. So if there are any immovable or movable assets, these assets are sold by way of auction or by any process which is agreed between the liquidator and the corporate person, and the money is realized into an account. Now, out of this money, you will have to pay to all the creditors all their money, and thereafter, whatever is remaining, you will have to pay back to the shareholders also. So in case any of the creditor is not traceable, you have a bank account at the time of the filing a claim, but today you are not able to give that money to that creditor for whatsoever reason. Maybe the creditor himself is under some different proceedings. So the concept of corporate voluntary liquidation account has been introduced, which says that all this money which cannot be distributed for whatsoever reason can be deposited with the regulator, which is the Insolvency and Bankruptcy Board, and any stakeholder tomorrow who would want that money will have to apply to IBBI in a very prescribed format. So this is the purpose of a corporate voluntary liquidation account. This ensures that the liquidator is not stuck in the process for want of either information or maybe the claimants not coming forward in spite of submitting a claim. The next definition is of a stakeholder. This is a very important definition. We'll also come to section 53. However, section 53 is not relevant as far as voluntary liquidation is concerned because every creditor will have to be paid. Otherwise, the process itself will go for a toss. It will have to be either cancelled or suspended by an application made by the liquidator. So the basic premise of a voluntary liquidation is that all the stakeholders are going to get money, including the shareholders. So stakeholders would mean stakeholders entitled to distribute proceeds from the liquidation asset under section 53. Effect of liquidation. So the moment the process starts, what is the effect of a initiation of a liquidation process? So it says that the corporate person shall from the liquidation commencement date cease to carry on its business. Why? Because the directors as well as the shareholders and if there are creditors, if any, all have resolved that this company has to be wound up. So there is no reason for anyone to continue the business. So the corporate person shall from the liquidation commencement date cease to carry on its business except if it is required for beneficial winding up of its business. So for beneficial winding up would mean that if you complete a certain project or if you complete certain scope of work, you are obviously going to get more money. So even in those cases, you can continue the business. For example, a running factory has a better chance of realization than a factory which is closed down. But in most of the cases of voluntary winding up that we've seen under IBC, the directors would do everything themselves and only for winding up the company would come, because what the liquidator is going to do, the same thing the directors can also do. I mean, there is no reason that they cannot sell their assets in the ordinary course of business, settle their liabilities in the ordinary course of business. So generally in most of the companies you will have shut businesses. That's why I took the statistics first. Even if you look at the 1100 companies which have initiated the process of liquidation, almost 71%, an overwhelming majority of these companies did not have any business. So there may be a situation where the company may carry on business for some portion of time just for beneficial winding up of the business. However, the company shall continue to exist. It is not that the company will cease to exist. The company will exist until it is dissolved by virtue of a dissolution order which is passed by the adjudicating authority. So this is as far as the effect of liquidation is concerned. The business continues if required for beneficial winding up. The corporate person also continues until it is dissolved. So only on dissolution, once you get a dissolution order, you are going to service that order on the register of companies, and by virtue of that, the name of the company will then get stricken off from the ROC itself. So we've seen the effect of liquidation. Now we will go as far as appointment of liquidator. So the corporate person can appoint an insolvency professional as liquidator. So only an insolvency professional shall be appointed as a liquidator, and wherever required, that insolvency professional may be replaced by another insolvency professional as a liquidator by following the due process. So the due process is nothing but the members would again call for a meeting and appointment of a liquidator would happen. So there is no need to go to the adjudicating authority also as far as change in the liquidator is concerned. Any resolution which is passed by the members shall contain the terms and conditions of the appointment of the liquidator, including the remuneration payable to him. So unlike an insolvent company, a company which has defaulted and then moved into liquidation on account of failure of the corporate insolvency process, in those liquidation regulation, there is a table which has been given for guidance so that that particular table may be used for remunerating the liquidator. However, in a voluntary winding up, it is an amicable discussion between the corporate person and the liquidator himself on the terms and conditions of the appointment. including the remuneration payable to him. I'm not saying that in the other scenario it's a fixed fee. Even for those sort of companies, you will have to negotiate with the committee of creditors, and the fees would accordingly be decided. The insolvency professional shall, within 7 days of his appointment as liquidator, intimate the board about such appointment, and the fees of the liquidator shall form part of the liquidation cost. And the reason I have mentioned this, that it will form part of the liquidation cost, because the liquidator also is entitled to distribution from the proceeds of the liquidation estate. So he is also one of the stakeholders under section 53 of the code. So we will come to section 53 in a later part. So whatever is the cost of liquidation along with the remuneration of the liquidator will be paid in priority before any other stakeholder is paid. Powers and functions of the liquidator. So a liquidator has wide powers to conduct the proceedings under liquidation. He can call for information, he can call for cooperation, he can also apply to the adjudicating authority for getting cooperation of certain people. But as we understand, this is a voluntary liquidation where the company itself is interested to wind up its affairs. So we do not foresee challenges of non-cooperation, information asymmetry, etc. So what I have dealt with as a part of this presentation is mostly I am looking at what sort of reporting is a liquidator supposed to do, because the powers and functions would remain in the normal course of business: power to call for any information, power to verify the claims, sell the assets, transfer the assets, power to recover money, and the duty is of course to distribute the proceeds in accordance with the code. So the liquidator will have to prepare various kinds of reports. So the first report that the liquidator has to prepare and submit to the corporate person is basically the preliminary report, and this is within 45 days of LCD. LCD is short form for liquidation commencement date. So preliminary report has to be filed within 45 days from the liquidation commencement date. So what exactly are the contents of a preliminary report? It is nothing but information about the company, what the company was doing, when was it incorporated, the details of its assets and the liabilities, the preliminary values as far as assets and liabilities are concerned, and if there are any litigations, etc., which are continuing, details about those particular litigation, assessment, etc. Very importantly, in a preliminary report, a liquidator will have to specify whether he intends to investigate the affairs of the corporate debtor. This is very important. In the first 45 days, the liquidator will have to take a decision whether he foresees any mala-fide or any transactions which fall within the ambit of an avoidance transaction, and that particular aspect also have to be dealt with in the preliminary report. The second report, so this is only once that he has to submit. This is only one of its kind, preliminary report. The second is an annual status report, which has to be given within 15 days from the end of 12 months from the liquidation commencement date till dissolution. So if the liquidation process goes on for 2 years, he will have to file at least 2 reports, annual status reports on what exactly is the progress in liquidation. Annual status report is nothing but a progress report in terms of the assets sold, assets remaining to be sold, the money which has been realized, the status of various litigation, the amounts which have been distributed to various stakeholders, so on and so forth. So it is a progress report which has to be filed every year by the liquidator to all the stakeholders in the company. Minutes of consultations with stakeholders. So liquidator has the power to consult stakeholders in case he faces any challenges. So the minutes of these consultations will also have to be shared by the liquidator, and then there is a final report on completion of the voluntary liquidation process. So once the affairs of the company are wound up, the assets have been sold, the liabilities have been paid off, and there is nothing remaining in the company, he will file a final report on completion of the voluntary liquidation process. And along with this, he is going to file an application for dissolution of the corporate debtors. Engagement of professionals. So wherever there are pecuniary instances where there is a requirement for a professional, the liquidator may feel the need for engaging professionals to assist him in the discharge of his duties. He may, in discussion with the corporate person, engage professionals as may be required. However, any such professional who is appointed or engaged by the liquidator shall not be his relative, not a related party, or serve an auditor of the corporate person at any time during the 5 years preceding the liquidation commencement date. So net it says that this should not be a related party, this should not be someone who is related to the corporate person in any manner, and that too in the capacity as an auditor in the preceding 5 years preceding the liquidation commencement date. Any professional who is also engaged shall disclose the existence of any pecuniary or personal relationship with any of the stakeholders, corporate person, as soon as he becomes aware of it to the liquidator. So even if you appoint a professional, you may not be, so there are various disclosures which has to be filed with the insolvency professional agency or with the IBBI on periodic basis. So these are disclosures which are a part of compliance for every insolvency professional. So relationship disclosure will also have to be filed, and it's a prudent practice which many of the insolvency professionals, whether they are an IRP or the RP or the liquidator, is going to take an undertaking from each of the professional appointed by him, that he is not in any way connected either to the liquidator, to any other professional or stakeholder who is engaged in the liquidation process. Consultation with stakeholders. So the stakeholders who are consulted shall extend all assistance and cooperation to the liquidator to complete the voluntary liquidation of the corporate person. So as I had already mentioned, the power of consultation remains with the liquidator, and all the stakeholders so consulted shall extend all assistance and cooperation, and the liquidator will have to make periodic minutes as far as such consultation is concerned. Now, regulation also talks about an extortionate credit transaction. So this is something which I have a very detailed slide covered towards the end, and I would come to that. But very briefly, this is a part of an avoidance transaction, a transaction which is liable to be set aside in the opinion of the liquidator. And if such transactions do exist in the corporate debtor, then the liquidator will have to make applications to the adjudicating authority to set aside such transactions, and all those people will have to make those contributions to the liquidation asset of the corporate debtor, which can thereafter be distributed. So a transaction shall be considered to be an extortionate credit transaction under Section 50, where the terms require the corporate person to make exorbitant payment in respect of the credit provided, or are unconscionable under the principles of law relating to contract. So if you make a contract in such a way that the corporate debtor will have to shell out obscene amounts of money, for example, if the corporate debtor has purchased anything from you, and or say for example a simple case of taking a loan, but if the loan rate itself is exorbitant, say for example the company borrows at 48% per annum, so in that case it can be called as an extortionate credit transaction. We will come to this in the later on slides. So such transactions are to be investigated, and such transactions are to be reported, so that the loss which has happened to the company can be made good, and that money can be distributed to various stakeholders. Public announcement by the liquidator. So the liquidator shall make a public announcement in Form A within 5 days of his appointment. So within 5 days of his appointment, on the day on which the shareholders pass a resolution, on that date is the liquidation commencement date. Thereafter, if at all there are creditors, the creditors meeting will be held, and thereafter the company would intimate the liquidator of his appointment. Once his appointment is intimated to him, within 5 days he will have to make a public announcement. He will have to call upon stakeholders to submit their claims. Remember, in the case of voluntary winding up, The directors will also give a solvency certificate. They'll give you a list of assets, a list of liabilities. However, having said so, it is also duty of the liquidator to make a public announcement. So if it doesn't make a public announcement, that would be dereliction of duty. So the liquidator has to make a public announcement inviting claims from all stakeholders to submit their claims within 30 days from the liquidation commencement date. So within 30 days, all claimants, all stakeholders will have to submit their claims to the liquidator. Thereafter, the liquidator will verify those claims and admit those claims to be paid in accordance with Section 53 of the Insolvency and Bankruptcy Code. Proof of claim. So every person will have to file a proof of claim, and he will have to also prove his claim as on the liquidation commencement date. So the burden of proving a claim, substantiating his claim, providing all the necessary documents strictly lays on the claimant who submits a claim. Claim by operational creditors. So any person claiming to be an operational creditor. Now I have been told that this gathering largely is of chartered accountants. So I am also getting into some of the details just for the benefit of those participants who may not be aware about some of the terms that is being used in the Insolvency and Bankruptcy Code. So an operational creditor is a person who has provided goods and services to the company. So there is a form by which an operational creditor will have to make and submit his claims to the liquidator. So any person claiming to be an operational creditor other than a workman or an employee. So an operational creditor also includes statutory authorities. For example, income tax, GST, VAT, property tax. Any statutory authorities would also fall within the ambit of an operational creditor. Even employees and workmen fall under the ambit of an operational creditor. However, the forms are different. That is why it says other than workmen or employee. They shall submit a proof of claim to the liquidator in person, by post or electronic means. So there are three modes by which the claim can be submitted. It is either in person, by post, or by electronic means in Form B of Schedule 1. Financial creditors are those creditors who have provided money against time value. So time value necessarily would mean interest or anything which would have the commercial effect of a borrowing. I'll not go into the details of a financial creditor, but largely for the understanding, it is any debt which has time value of money, that means which has interest. So anyone who claims to be a financial creditor shall submit his claim in Form C. Similarly, workmen and employees shall also file their claims in Form D, either in person, post, or electronic means. Only a financial creditor, he is duty bound to submit under electronic means. He cannot submit it by post or by in person. He only has to submit in electronic means. Claims by other stakeholders. So any person claiming to be a stakeholder other than operational creditor, financial creditor, workman and employee shall submit proof of claim in person, post, electronic means in Form F. So what do you mean by other stakeholders? So even shareholders are other stakeholders, because Section 53 talks about shareholders also getting the money in a voluntary winding up. They are the people who are going to get the money. There would be certain creditors who would have given money but without interest. So they are not operational creditors, they are not workmen, they are not statutory, they are not even financial creditors, because it is not against time value of money. So such people will file claims in Form S as other creditors. There are certain people who would have given advances. For example, if this is a FMCG company, a distributor or a stockist would have given deposits to the company. So any security deposit may also fall within the ambit of other stakeholders. They are not operational creditors, they are not financial creditors. Proving security interest, as I've already said, is has to be done by the claimant. So the claimant will have to prove his security interest. So what are the basis? The basis is the records available in an information utility. So just to dwell upon information utility, it is a unique creation by virtue of the Insolvency and Bankruptcy Code. There is only one information utility currently which has been given a license to operate as an information utility by the regulator, which is NESL. Now this works very much like a CIBIL. However, there is a lot of action which is going to happen from an information utility in terms of proving debts, proving claims, so that the processes under IBC becomes very much simpler, right from admission till the claims, till default, etc. So information utility going ahead, it is envisaged that a bulk of reliance as far as claims or initiation or admission of petition will rely on the records of an information utility. The second is certificate of registration of charge issued by the registrar of companies. If I am saying that I have a charge against a corporate person, section 77 of the Companies Act says that the charge will have to be registered with the registrar of companies. If a charge is not registered, then it is void against the liquidator. That is what section 77 of the Companies Act say. So to prove your security interest, you may also produce a certificate of registration of charge issued by the ROC. There is also another concept of CERSAI. So you can also register properties which are mortgaged either by equitable mortgage or by simple mortgage in the Central Registry of Securitization, Asset Reconstruction and Security Interest of India. So this is the full form for CERSAI. So even if there is a CERSAI registration available, then also you can prove your security interest or other relevant documents which adequately establish the security interest. Periodical payment. So on the liquidation commencement date, everything stops. So in case of rent, interest, etc., you can make those claims only up to the liquidation commencement date. Verification of claims. The liquidator shall verify the claims submitted within 30 days from the last date of receipt, and he may either admit or reject the claim in whole or part. So once he issues a public notice within 5 days of his appointment, he gives 30 days to all stakeholders to submit their claims. And once all the claims are received, he gets another 30 days to verify all the claims. So effectively within 60 days, all the claims will have to be dealt with one way or the other. Either he admits the claim in full or part, or he rejects the claim in whole or in part. If a creditor who is not satisfied with the decision of the liquidator, he may appeal to the adjudicating authority against the decision of the liquidator in accordance with section 42 of the code. Mostly in voluntary winding up, you will not have many such cases unless there are some contractual disputes, because when you ask a creditor to prove a claim, he is going to ask for the sun and the moon. In most of the cases we are seeing this, but in the case of a voluntary winding up situation, it is all the more important that the claims are paid to the satisfaction of the creditors. A very important line which is there in the code, it says all the claims have to be paid as per the satisfaction of the creditor and not as per the satisfaction of the liquidator. However, the liquidator is duty bound to verify the code basis the information that he has, basis the information which is there with the corporate person, and he will either admit or reject. If a creditor is still not satisfied, he can go to the adjudicating authority and file an appeal. List of stakeholders. So the liquidator shall prepare a list of stakeholders on the basis of proofs of claims submitted and accepted under these regulations with the amount of claims. So he is going to say that this is the list of stakeholders A, B, C, D, E, F, G. These are the amounts that they have claimed. These are the amounts that have been admitted. These are the dues which are secured. These are the dues which are unsecured. So all those bifurcation of claims will have to be given by the liquidator when he is preparing a list of stakeholders. He will also have to say that these are the proofs that have been admitted or rejected in part, and these are the claims which have been wholly rejected. So once the liquidator verifies the claim, he makes a list of stakeholders, and this list of stakeholders has to be prepared within 45 days from the last date of claims. This list of stakeholders is available for inspection by the person who has submitted the claim. It is also available for inspection by the shareholders, the partners, the directors, or any guarantors of the corporate person. It will also be displayed on the website, if any, and it is also displayed on the website of the board, which is the regulator. So, in short, this is a highly transparent process where all the claims received with the classification bifurcation are disseminated for the information of all the stakeholders, so that no stakeholder can come and say that, oh, I didn't knew that my claim was partly rejected or partly accepted. So all this information has to be made public by the liquidator. It is always better to prepare a website which does not cost much and put all the information on the website. So this would help avoid any litigation in future by any of these stakeholders. Realization of assets, so manner and mode of sale. So the liquidator may carry out a valuation and he may also sell the assets of the corporate debtor in a manner and mode approved by the corporate person. Unlike the other process, the forced liquidation process on account of default, there is a certain manner and there is a certain mode also which has been approved. However, to make life simpler and the exit easier, the liquidator shall, in consultation with the corporate person and in compliance with the applicable laws, he will have to frame the manner in which he is going to sell off the asset. He need not do a public auction unless he feels necessary that a public auction will have to be done in the facts and circumstances of that particular asset. So asset will include all assets, a set of assets, parcels, as the case may be. Recovery of monies, a liquidator shall endeavor to recover and realize the assets and dues in a time-bound manner for maximization of value to the stakeholders. Liquidator has the power also to call for uncalled capital and unpaid capital contributions. So in case of contributory, that means if the shares are partly paid up and the amount is due, he may call that amount from any contributory, and no distribution shall be made to the contributory unless his contribution to the uncalled or unpaid capital is done in accordance with the constitutional document. So this would be quite simpler in terms of realization of assets. He can sell the assets in consultation with the corporate person, choose any manner or mode in which he wants to dispose of the assets, recover all the monies from debtors, security deposit, income tax refund, so on and so forth, in a very time-bound manner for maximization of value. And on the liability side, if there is any uncalled capital, even that he can call upon the contributory to pay. Any money which is received, there is a new bank account which is opened by the liquidator, which is operated by the liquidator. So any money which comes in can come into that particular account. So it is XYZ in voluntary liquidation. So that is how the nomenclature of the bank account is. So any money which comes there, even the persons who are depositing the money are aware that this is a liquidation account of the liquidator. Another reason of doing this is no one can attach the assets or the bank account of the company in liquidation. So the liquidator's account cannot be attached for any dues. The money in the account shall not be used for any purpose except in accordance with section 53. We'll come to 53 later. Any payments out of the account by the liquidator above 5,000 shall be made in checks. So the liquidator is refrained from utilizing much of cash to do day-to-day operations. So anything more than 5,000, it will have to be done through online transactions or by way of checks. Once he has realized all the money, it is the duty of the liquidator to distribute the proceeds within 30 days from the receipt of the amount to all the stakeholders. So within 30 days, he will have to start the distribution to all the liquidation, towards the liquidation cost, towards the secured creditors, unsecured creditors, workmen, employees, and all the creditors, as per the section 53, which is the waterfall mechanism for payment. Before making any payment to any stakeholders, he will deduct the liquidation cost in full. In case there is an asset which cannot be sold readily or which cannot be sold advantageously, so in that case, the liquidator may assign that asset to a particular person with the approval of the corporate person. So in case there are certain assets which are not readily realizable, maybe it may take some more time. So the liquidator may assign that to a particular person, and then he can file for winding up of the company. A return of money if a stakeholder has got something which he should not have got, or if the liquidator is erroneously made any distribution which the particular stakeholder was not entitled to at the time of distribution, then that stakeholder is duty bound under Regulation 36 to repay that money to the liquidator. Distribution of assets. In a voluntary liquidation, it is not of much relevance. Otherwise, this is primarily one of the key sections which is widely debated, widely followed, widely looked upon by all the creditors as far as distribution of assets and the waterfall mechanism. So in a corporate insolvency resolution process, Section 53 has importance. It is only a guiding principle. But when it comes to liquidation, Section 53 is a Bible for almost all the stakeholders and the liquidator himself. So I thought it fit that we should also very briefly discuss Section 53. I'll not go into details, but very briefly I will discuss what is Section 53. So the entire proceeds out of the assets of the company which flow into the liquidation account, which is maintained by the liquidator, this is the priority in which the payments will have to be made. The first is the insolvency resolution process cost. Of course, it will not apply in a voluntary liquidation, but the second aspect of liquidation cost is going to apply. So the first would be the insolvency resolution cost and the liquidation cost. Thereafter, the workman dues up to 24 months. Mostly in voluntary winding up, you are not going to find these challenges of workmen, etc. not being paid. So workman dues, if at all unpaid, has to be paid, and debt owed to secured creditors who have relinquished security. So when it says and, that means this would be distributed in proportion. For example, the dues of the worker is, say for example, 100, and the dues of the secured creditors who've relinquished security is 1000. So any money which come will get distributed in a ratio of 1:10. So it will get distributed proportionately. So Section 52 also gives an option to a secured creditor. So if I am a secured creditor who has security, some assets of the corporate debtor in which are mortgaged to me or under lien to me, I can make a decision whether the liquidator will sell or whether I will sell. This is a very easy choice to make in a voluntary winding up, because let the liquidator sell it, and anyways I am going to get the entire money because I am a secured creditor and this is a voluntary winding up process. However, in the other process, secured creditors would take a decision either on relinquishment or on realization, depending upon the facts and circumstances of the particular asset. The next waterfall mechanism. So once you paid 1 and 2, then comes employee dues up to 12 months. So unless 1 and 2 are fully paid, you cannot pay the employee dues. Thereafter, financial dues owed to unsecured creditors. So at every stage, it will have to be fully paid before you go and make distribution to the second level. So this is the pecking order in which the distribution is made under the code. Employee dues up to 12 months, thereafter financial debt owed to secured creditors, unsecured creditors, thereafter government dues up to 20 months, and unpaid debt of secured creditors following enforcement of security. So you've seen step 2, creditors who have relinquished security. At step 5, you say unpaid debts of secured creditors following enforcement of their security. So creditors who've made a choice of relinquishment will get paid at the second level. Creditors who would want to realize on their own towards the unpaid debt are going to fall under item number 5. So this is how the pecking order is going to work, depending on the decision you take as a secured creditor, either to stand inside the process or to stand outside the process in terms of recoveries. Thereafter, it says any remaining debt and due. So any operational creditors, vendors, service providers would fall here. Workmen more than 24 months. Employee dues more than 12 months. Government dues more than 24 months. Everything is going to come as a part of any remaining debts and dues. So thereafter would come preference shareholders, thereafter would come equity shareholders. What has been kept out is the unpaid employee provident fund, pension fund, gratuity dues. So these are kept outside the liquidation estate as these are highest priority. However, what this does imply is there will have to be a provident fund there will have to be a pension fund which is not under the control of the corporate debtor, which is a third party fund, or even if the corporate debtor has made a fund and remitted amounts towards it, even those funds cannot be touched. There has been a recent Supreme Court judgment because there was a lot of litigation around this on what happens if such a fund has not been created. For example, Provident Fund has been deducted but not contributed. Gratuity fund has never been done by the company. So as in when people were retiring, gratuity was being paid out of the accrual. So if all such things have not been done, the Supreme Court has now opened, this is a very recent judgment in the last, I think 1 week, 10 days, that if there is no separate provision, the liquidator need not make a provision. This does not apply to voluntary winding up, but I thought since we are on this topic of Section 53 unpaid provident fund dues, there should be some clarity as far as this is concerned. So a long pending matter has finally been settled by the Supreme Court in one of its very recent judgments. Completion of liquidation. So once you have sold all the assets, realized all the money and made all the payments, it is time to submit a final report to the adjudicating authorities along with an application for dissolving the corporate debtor. So within 270 days from the liquidation commencement date, so within 270 days, the process will have to end. That means you have to sell all the assets, realize all the other money and pay the liability. So within 9 months, this process will have to be completed in case there are creditors. If there are no creditors and only members have to be paid, the recent amendment says within 90 days, it has to be closed. So it says that the liquidator shall endeavor it says, but endeavor means best effort basis. However, it is binding on the liquidator to provide reasons why he could not complete the process within 270 or 90. So again, I'll repeat, if there are creditors who have filed claims, then it comes to 270 days from the liquidation commencement date. If there are no creditors in the company, there are only members, that means it is 90 days from the liquidation commencement date. So this processes will have to be completed in a time-bound manner. Claims will have to be called. Claims will have to be verified also in a time-bound manner so that all these companies get a timely exit. The amount is also freed so that they can be utilized for some other purpose so that economic activity happens. So in the event a voluntary liquidation process continues for more than 12 months, he shall hold a meeting of the members within 15 days from the end of 12 months and at the end of every succeeding 12 months till dissolution of the corporate person. Because there is no adjudicating authority here and because the liquidation process is continuing for a time, the regulations mandate that the contributories, that are the members of the company, the shareholders of the company, should be called every 1 year. A meeting should be called every 1 year and they should be updated on the progress of the liquidation, and the liquidator shall present the annual status report indicating the progress in liquidation, and it shall also enclose the audited accounts of the liquidation showing receipts and payments pertaining to the liquidation. So until and unless the liquidator completes this process, and if he exceeds 12 months, he will have to call for a members meeting, and in that members meeting he has to present an annual status report where he gives a progress in the liquidation along with the audited accounts for receipt and payments. So the question is, under liquidation, what happens to compliances? What happens to audit of the books? So everything continues. Even if it is a forced liquidation, involuntary liquidation, then also there are judgments otherwise also. However, most of the liquidators are complete in their books, filing the ITR, so on and so forth. So that is something which many of them are doing because compliances will have to be done. The final report on completion of the voluntary liquidation process, a final report is prepared with the audited accounts with receipts and payments. A statement will also have to be filed saying that the entire assets of the corporate person has been disposed of, all the debts has been discharged to the satisfaction of the creditors, and no litigation is pending against the corporate person, or if at all a litigation is pending, sufficient provision has been made to meet the obligations on account of the pending litigation, and a sale statement in respect of all the assets. So if you've sold some of the movable and immovable assets, you will have to also annex a statement, an asset sale report on how the sale has been conducted by you. So this final report also has to be submitted to the Registrar of Companies as well as the board. So finally, once the final report is prepared, along with the compliance certificate, an application will have to be made to the adjudicating authority to dissolve the corporate debtor. Now, what if there is a instance of fraud or insolvency of the corporate debtor? Now, when I started this in terms of section 59, the directors are supposed to make a declaration of solvency. They are also supposed to make a declaration saying that the company is not being liquidated to defraud any person. However, in the course of the liquidation process, if the liquidator detects any fraud or insolvency, that the assets are not sufficient, there are too many liabilities which the directors have not disclosed on affidavit, then in that case, there are remedies which the liquidator can do. Once the liquidation process is complete, he will also have to preserve the books and records of the liquidation process. So this is to be done for 8 years. So we'll cover both the aspects in this particular slide. So detection of fraud, where the liquidator is of the opinion that the voluntary liquidation is being done to defraud a person, he shall make an application to suspend the process, and the adjudicating authority may pass such orders as it deems fit. So that is the case of fraud. In case he is of the opinion that it is unable to pay all its debt from the entire assets to be sold, he shall also again make an application to suspend. So in both the cases, he will make an application to suspend the process and any other order which he deems fit. Once the liquidation process is complete, the copy of the reports, registers, books of accounts will have to be maintained for at least 8 years by the liquidator himself or with an information utility. So these are just of the formats which have been prescribed as a part of the voluntary liquidation process. I think I've taken you through this, since this slide would, since this presentation would also be shared with all the members, all the participants. I think you all can go through this. I have made this exhaustive just as a reference point for the participants. Now we'll come to some of the practical aspects on voluntary liquidation process. Maybe a couple of orders, NCLT orders or the orders of IBBI. So in one of the case, Wise Consultancy versus ROC, the NCLT Bangalore held that the liquidator has followed a due process of law and thus the affairs of the company were completely wound up, assets were liquidated, and hence application for voluntary liquidation was to be allowed. So I think in this case, the ROC probably did object to the way in which the process was conducted. However, the NCLT or the adjudicating authority has not found any fault, and accordingly it has accepted that the application shall be allowed. In another interesting case, I mean, this is a disciplinary order by the IBBI. It says where the liquidator failed to make a public announcement and continued with orders, it was a violation of the regulation. So in this particular case, he failed to make a public announcement of initiation of the liquidation process. So the part of the disciplinary proceedings, they have considered it as a violation of the regulations. However, in this particular order also, I mean, the opinion is divided amongst professionals, practicing professionals, where IBBI has also said that he's continued the auditors who are the same. So if the auditors are continue the audit, that's a statutory function. But if you continue the auditors and give them any consulting work, then that is a problem as far as the liquidation process is concerned. The regulations do not allow for any such thing, and this is going to be considered as a violation of the regulations. Now, when we started this session, the Honorable Vice Chairman did mention about a relief which had come in terms of a clarification issued by IBBI. So IBBI has been having various consultations with various practicing professionals as well as industry just to understand if there are any roadblocks in the smooth conduct of any process, be it a CIRP process or liquidation process, including a voluntary liquidation process. So based on feedback, I think they examined one particular aspect, that the NOC or the no due certificate from the income tax department did not come in time, and that is where there were delays as far as process is concerned. See, as a liquidator, it is very easy for you to say that I have given a public announcement. Income tax department was supposed to file a claim. They have not filed a claim, but for the income tax department, they may probably come after the directors of the company also. So there is a lot of pressure which comes from the KMPs or the shareholders of the corporate person, so that this also happens, one, in a time-bound manner, and secondly, that all the no dues, etc., is also being taken from income tax department. Tomorrow there may be allegations against the liquidator, so on and so forth. So to be cautious, most of the liquidators were following this process of seeking NOC or no due certificate, and most of these certificates did not come on time, and hence there were wide delays as far as closure of these processes are concerned. So once IBBI took cognizance of this matter, they issued a circular saying that any insolvency professional handling a voluntary liquidation process is not required to seek any NOC, no due certificate from the income tax department. Since I showed you section 53, and you can see where the statutory authorities fall under section 53. So most of the other companies which go into liquidation on account of default, their secured creditors itself takes a haircut. So there is no question of income tax authorities getting money in those cases. But in the case of a voluntary process, almost all the creditors will have to be paid, be it an income tax department or a GST or any department. So all these departments are then requested to complete the assessments in time. However, as you've seen that 71%, as per the statistics, these companies were not having many operations. So these companies were not operational for the last 2-3 years. So generally income tax assessments also do complete expeditiously. However, companies where there are certain appeals, etc., which are filed, these were taking time. So what IBBI said was, the liquidator is mandated to make a public announcement of his appointment and calling for claims. All claims will have to be submitted within 30 days, which a liquidator shall verify, and he shall intimate. Once intimated, if the other party is not happy, under section 42, they may apply to the adjudicating authority if they had any grievance against the liquidator not accepting their claim or rejecting their claim. So once that remedy is available, they are saying that the code nor the regulation does not envisage seeking any NOC, no dues from the income tax department. They are saying nowhere section 59 or in the code or in the regulation is there a mandate to seek a no due certificate from the income tax department. So you can also take reference to section 178 of the Income Tax Act, which basically obligates the liquidator to fulfill certain income tax related requirements. For example, it said within 30 days of commencement of liquidation, the liquidator was to intimate the income tax authorities that a liquidation process has started. Now, this has been done away in terms once IBC came in. IBC also modified a lot of statutes and acts. So even Income Tax Act for that matter was amended when IBC was passed by the Parliament. So in that particular instance, under section 178, it explicitly states that the provisions of section 178 shall not have any effect for anything except for provisions of the code. That means section 178 does not apply to cases under insolvency and bankruptcy code. Basis on a joint reading, IBBI has now clarified that an IPU handling the voluntary liquidation process is not required to seek any NOC NDC as a part of compliance. Now, there are also certain tax aspects which a liquidator will have to look at, because as I've said, this is a voluntary liquidation. The company is solvent, there is no default, it has the ability to pay all the debts to all creditors. And thereafter, if any surplus is left, that money will obviously go back to the shareholders. Now, there is if it goes back to the shareholders, it will get taxed by way of capital gain. But then if the company also pays money to the shareholders, it is nothing but deemed dividend under section 2 subsection 22C of the Income Tax Act. So in the hands of the company, there may not be any capital gain unless they are selling an asset. But while they are paying the money, the concept of deemed dividend is something which the liquidator will have to take into account. So any money, the reserves and surplus, essentially any money more than the reserves and surplus will essentially be treated as deemed dividend, and accordingly the tax will have to be paid by the liquidator. So that is something which is there in the hands of the company. In the hands of the shareholders, it is capital gain under section 46, for which the liquidator has nothing to do except he may have to comply with whatever income tax formalities, etc., would be there in terms of deduction of TDS, etc., if at all it is applicable. So deemed dividend, so distribution shall be treated as deemed dividend to the extent of accumulated profits of the company immediately before liquidation, whether capitalized or not, and the company shall be liable to pay tax on distributed profits. As per section 46, where the assets of the company are distributed to the shareholders on liquidation, distribution shall not be regarded as a transfer by the company. Therefore, there will be no capital gain to the company. However, where a shareholder on liquidation receives money or other assets, he shall be chargeable to income tax under the head capital gains. So this was as far as tax aspects to be considered was there. Now, another important aspect is withdrawal of a voluntary liquidation process. Now, it's a one-way train, the way the code and the regulations have envisaged. However, as I've said, so out of the 1100 odd cases where voluntary winding up was initiated, there were some cases where the processes were suspended or cancelled or were taken back. So the provisions for the code are silent. They are silent on the withdrawal or closure of the process after its initiation. So in the absence of any express provision, what do? Jurisprudence would guide the process. So if there is nothing written in the code nor in the regulations, you will look at jurisprudence. Any liquidator or any aggrieved stakeholder is going to make an application to the adjudicating authority. So in some cases, adjudicating authority has allowed for closure of the voluntary liquidation process. Probably the promoters or the members came back, they passed a resolution, a special resolution asking for cancellation of the voluntary winding up, and accordingly NCLT allowed the application because no one wants a company to shut down in case the promoters would want to continue business in the company. So as on 31st of October, this is just a dated information, voluntary liquidation processes of 8 corporate persons have been withdrawn, suspended or cancelled. The liquidator approached for suspending the liquidation process in one case, the only reason being claims exceeded the assets, and several litigations were also pending. So there were certain instances in which the corporate persons went. There was one instance in which the liquidator went saying that the assets are insufficient, and there are several litigations which might take years to complete. So if there are litigations relating to land, it takes years and years to complete. Assessment may still get over maybe in a year or two, but litigations, especially in civil courts, takes a lot of time to finally culminate. So based on this, IBBI, the regulator, had circulated a discussion paper somewhere in November of 2020 for public comments on withdrawal of the liquidation process. So what essentially this discussion paper asks is, do you need the adjudicating authority's approval for withdrawal of the process, or the process in which it initiated, in the same process it can be withdrawn if there are no creditors? So the question is, if there are creditors, what do you do? If there are no creditors, what do you do? So the discussion paper does talk about 2-3 scenarios. So it says that if the assets have not been sold, then probably the members can pass a special resolution and take the company out of voluntary liquidation. If the assets have been sold and the creditors, some of the creditors have been paid, the balance creditors have not been paid, then 100% approval of those creditors will be required. It also says, so these are all suggestions, these are all not finalized right now. So it also says that for withdrawal from the process, the liquidator will have to file a statement on an affidavit or otherwise saying that the company is not being taken out of the process. The withdrawal is not to defraud any person, and there is no wrongdoing as far as that company is concerned. Now, this is something which is at the stage of legislation making. What exactly comes out of this, whenever it comes out, the regulations or the code would be suitably amended by the regulators. The last aspect to basically what we were discussing was the avoidance transaction under the code. So as a liquidator in a voluntary process where the company has made a declaration of solvency, the company has given an affidavit that this particular process has not been initiated to defraud any person. However, the legislature thought it fit that avoidance after transactions under the code should be looked at by the liquidator. So this essentially comes from section 35 to section 53 of the code. So all these avoidance transactions will have to be looked at by the liquidator even in a voluntary winding up process. So very briefly, we will go through the four major types of transactions which are to be looked at by the liquidator. The first is a preferential transaction under section 43. So for every transaction, there is also a look back period. How far can you go back? Can you go back 10 years? Can you go back 15 years? Of course, you can go back as much as you want, but the look back period for certain cases is 2 years prior to insolvency commencement date for related parties and 1 year for other parties. Excuse me. Sorry. So preferential transaction under 43. So what is a preferential transaction? You've looked at section 53. Sorry. So what it says that if the corporate debtor, if the company has given a preference by which one party has got paid prior to another party being paid. So in that case, it is a preference. And if it is a transaction which has entered into with a related party before 2 years prior to liquidation commencement date, then it's a deemed preference. For non-related parties, 1 year. For example, if I am an unsecured financial creditor, I will be paid higher up in the hierarchy if the company were to go into liquidation. But you have paid an operational creditor who was below the hierarchy and he was your related party. See, if you do this in the ordinary course of business, then it is fine. If it is something which is not in the ordinary course of business, then there is a problem. I will give you an example. I mean, it is not first in, first out. If I have 10 suppliers who have provided me goods, and if I realize money, it is not necessary that I pay the 10 parties, right? I may pay 7 or 8, I may not pay 3 basis my business contingencies, exigencies, but there should not be a very clear case of preference. It should look like it is in the ordinary course of business. So out of these 10 parties, I have paid a related party the entire amount, and the balance 9 parties I have not paid. So this particular related party becomes a preferential transaction. So any antecedent debt has been paid. That becomes a preferential transaction. This is not applicable in the case of a voluntary winding up because this company is solvent and ultimately everyone is going to get paid. However, it is the duty of the liquidator to look at such transactions and report it back to the adjudicating authority. Similarly, undervalued transaction. Undervalued would mean a gift. So if you've given a gift to a particular creditor and it is an undervalued transaction, asset worth 100 has been sold at say 60 rupees or maybe at 20 rupees. And if it can be proved that this was a transaction done to defraud the creditors, then someone in the value chain has lost money. The shareholders would have also lost money because of the action taken by the KMPs, which is the board of directors. So even in that cases, the liquidator can investigate, and if there are undervalued transactions, these transactions can be reversed. I had also seen some balance sheet now. As a part of the practice, we also see a lot of balance sheets. So in certain cases, you may look at purchases 5 crores, but sale would be 50 lakhs. And if you ask them, why did you sell material worth 5 crores at 50 lakhs, they would say, okay, the material went scrap, etc. XYZ happened, the demand suddenly fell, and we had to liquidate the inventory at 90% loss. It may be a genuine transaction also. It may be an undervalued fraudulent transaction. So there may be a transaction which can be actually done in such a way to defraud the creditor. So that is where the liquidator is a neutral party. He is a professional. He is supposed to investigate. He can also appoint auditors to unearth such transactions. And if at all such transactions are there, this will have to be reported to the adjudicating authority, and all these transactions will have to be reversed. So for a preferential transaction, there was a look back period for 2 years, related parties, 1 year for non-related party. But in the case of an extortionate credit transaction, it is in the case of an undervalued transaction, it is the same thing, 2 years and 1 year. But when we come to extortionate credit transaction, it does not distinguish between a related and an unrelated party. It says 2 years for all sorts of extortionate credit transaction. One example that I gave about an extortionate credit transaction was that you've taken loan at 48% per annum. I've seen one case, there was an NCLT Mumbai order which probably talked about a very usurious transaction. So it said that the rate of interest is 18%, but in case of default, it is 1% every day of default. So for 365 days, it will become 365%. So such application was thrown out by the adjudicating authority. So such transactions also are entered. You may not find many examples, but there are a lot of examples for this. So does that mean if I have taken unsecured loan from an NBFC and that NBFC gives a loan to everyone at 18 to 22%, can you say that's an extortionate credit transaction? You can't say that, because that is in the normal course of business, because that is the rate at which it gives everyone. But something which is unconscionable, which a normal person will not enter into such contract. So that is what the objective is, to find out in an extortionate credit transaction. Again, as I've mentioned, the look back period is 2 years, irrespective if it is a related party or an unrelated party. In a preferential and an undervalued transaction, a related party 2 year look back, unrelated party 1 year look back. In the case of fraudulent transaction, there is no look back period which is prescribed. So these are transactions which are obviously not in the ordinary course of business. These are transactions entered into to defraud the creditors. So it is the duty of the liquidator to find out such transactions, get it back, and so that the money which comes out of this can also be distributed to the shareholders and all the creditors. So I think with this, I come to an end as far as my session is concerned. I'm now open to questions. I think a last point which I would want to touch upon, which Madam Shripi had also mentioned earlier. So compliances. Now, if there is a parent, a shareholder which is there in a foreign entity, any money which goes out of India, you'll have to do RBI and FEMA compliances. So all these compliances, in my respectful submission, would have to be done. Of course, it's a time-consuming factor, but you will have to get all these things done before you wind up a company. Now, in case there are unusual delays, you may file for dissolution, and you may, in my opinion, you may also, wherever there are delays, you can also make the other party, the other person a party to an application saying that I have given you reasonable time to deal with this particular issue. Now, the code says 270 days or 90 days within which I have to do. I have liquidated all the assets, paid all the liabilities. At best, I will have to file a dissolution application for dissolution. Since this item is pending, I will make you a party to that application, and whatever submissions you will have to make, you can come and make before the Honorable Adjudicating Authority. So I think you can use all such tricks and measures, but there is no one solution which would work in every situation. So the liquidator will have to take a calculated call on what particular strategy he would want to take to close the liquidation in a time-bound manner. So with this, I hand it over to the moderators. I will stop sharing my presentation. Ma'am, you're on mute. Preeti ma'am, you're on mute.
Yes. Thank you, Abhin. And the session was really a very fruitful session, I can say. and lot of questions we have received, but few of the questions I understand that your presentation has already taken care of, and some of the questions which the presentation has not taken care of, I will deal into those questions only, so that
Sure,
for the
ma'am.
want of time and those questions we can cover, right? So
Yes, yes.
as regards to the process and procedure of voluntary liquidation, it's already covered. So all those things I'm not going into that, for the benefit of the participants who have actually given the questions which are not covered. So one question is, closely held private limited company has a piece of land as asset funded by reserves and director's loan. Can we go for voluntary liquidation wherein promoters take away the piece of land against their dues, loan, shareholding?
I think that is possible. You can assign it or distribute it to any stakeholder. So what the regulation does mention is, in case any asset cannot be sold readily or advantageously, possibly if this is a piece of land you are looking at, maybe some development happening, some FSI coming in the future. So in case if it cannot be advantageously sold or readily sold, this can be distributed to the stakeholders in consultation with the corporate person. So you will have to consult the corporate person, and then yes, if both parties are ready, it can be done.
Great.
But then this would be a transfer as per the Income Tax Act. So all those compliances will have to be done.
Right, correct. Very true. The next question is, suppose the company has plant, inventory and receivables, then should it require to appoint both valuers, SFM, and also for the plant?
Yes, valuers will have to be appointed. You may also probably dispense away with the valuers in the case of inventory, which can be sold in the normal course of business. So inventory can be disposed of in the normal course of business. However, for machinery, you will have to appoint a valuer.
So, okay. So then SFM need not be there. However, for plant, that valuer should be there.
Yeah, my
Yes.
only addition which I would want to add in this is, see, I mean, a lot of time when the time for mandate comes, as an insolvency professional, you'll always have to look at the assets and the liabilities. What the promoter can do, why should you get and do it? You should always ask them to dispose it off first and then get into the process so that the process can be closed in a time-bound manner. Otherwise, a lot of times the liquidator will end up doing stuff which is not supposed to do.
Right, for valuation and all those things.
Absolutely right. Yeah, they themselves can do it.
Perfect. Great. Another question is, what is the difference between winding up under section 361, read with rule 190 of companies winding up rules vis-a-vis voluntary liquidation under IBC? And is there a difference between liquidation, winding up and dissolution?
That's a very technical question. I mean, just to answer it now, any winding up, whether it is liquidation or it is dissolution, whatever word you call it, at the end of the day, the company is going to get struck off from the register of companies. And one way to do it is under IBC. I think there are other processes also where you can get the name of the company struck off the register of company. So that's also another process. I am not too aware about that. But that's also another process where you can strike off the name of the company under the Companies Act. However, if you are looking at IBC, this is the only way, either it's a voluntary winding up or it's a forced winding up.
So I understand, as per my experience, you can correct me if I am wrong. In case if there is no assets or liabilities, no assets in the balance sheet of the company, then that struck off under this Companies Act can happen, and there is
Yes.
not requirement of voluntary right?
Absolutely right. So I think both processes can work the same. You can also get it into voluntary winding up and still do the same.
Right, correct. Going to next question. If the board is substituted by the liquidator, can the directors communicate with the outsiders on behalf of the company under liquidation?
So in my opinion, the directors will remain even under a voluntary, in a voluntary winding up, the board will remain. It is not to be discharged, unlike in a forced liquidation. So section 33 and 34 do not apply to voluntary liquidation. 35 to 53 apply. So discharge of the board, I think, comes under section 33 or 34.
Okay. So then there is no COC, so board will remain, and
Board will remain. Board will remain.
Where to opt for fast track?
I think I lost you again.
Where to opt for fast track striking off process, and where to go for voluntary liquidation process?
See, ideally, if there are no assets in the company, there are no liabilities, it is better to go to a strike off. However, in the case where there are some litigations, there are some assessments pending, so in that case, the market perception is IBC setup is much better, because a liquidator comes in, a claim is forced, right, on the statutory authority that they have to close this in a time-bound manner. So one will have to weigh the pros and cons, because the assets can be dealt with by the liquidator, by the company, but certain things in terms of assessments, litigation, I think a liquidator may help you expedite the process.
So that will come to NCLT.
Yes.
And striking off will go to ROC.
Yes.
Once the voluntary liquidation process has commenced, what is the status of statutory audit? And is it required to be done? And if so, up to which period? And what if the existing auditor resigns? Who will appoint the new auditor?
So, as far as my understanding goes, even in a normal liquidation, a forced liquidation scenario, the audit will have to be conducted. The books will have to be completed. Income tax returns will have to be filed. So you can file it till the time you don't get a dissolution order. You can keep on doing it, and in case the auditor has resigned, the liquidator has sufficient powers to appoint a statutory auditor. That can be done. If the company is not comfortable, or if the liquidator also wants to be compliant 100%, he can call for a general meeting. Even that can be done.
So board will appoint, or liquidator will appoint the new statutory?
Finally, liquidator will appoint. At the end of the day, it is the liquidator who will appoint, but in some cases, some professionals take the other view, that it is ratified by the members in a general meeting.
Perfect. Even the shareholders have to file a claim form. Once the claims are received, if it happens the total claims cannot be serviced by the existing assets or from the realization of the assets, what to be done?
So in that case, in one of the cases, this did happen where the voluntary winding up process did start, a declaration of solvency was given. However, at the time of getting the claims, the liquidator was of the opinion that the claims exceeded the assets. So in that case, you will have to apply to the adjudicating authority saying that this process cannot continue, kindly suspend this process, and it comes out.
Okay. So then next, now 2-3 more questions. 5 minutes will complete with your permission.
Sure.
So if there remains surplus after paying all debts and is more than the share capital, will the difference be treated as dividend or how?
Yeah, it will be deemed dividend. It will be deemed dividend.
So both way, if it is less and if it is more, that we have covered.
So if it is less, I think if it is less than the paid up capital and the accumulated reserves, then it won't be deemed dividend. Then it's return of capital. But if it is more than that, then it will be deemed dividend.
If an intangible developed by a liquidating company exists but does not have a realizable value, can the liquidator assign or pass on this asset to the holding company?
It can do that, but then it has to be valued, and someone will have to say it has no value. Right. And at the end of the day, if you're going to give it to the holding company, which is 100%, if it is a wholly owned subsidiary, then I think it is fine, because whatever is going to remain is going to go to them only. So you can assign it to them also. However, valuation will have to be done by the liquidator so that tomorrow no one accuses him of selling an asset at a less value.
Okay, but then So, for example, some IPR rights or something like that is there. So, how to value that? Quantify.
A registered valuer will have to be appointed. You'll have to appoint a professional who's going to give a value. If the value is 0, it will be assigned at that value. If the value is X, it will be assigned at that value. Then either it becomes a capital gain in his hands or a deemed dividend year. So all those things will have to be done. So it's a transfer at the end of the day, and the transfer will have to be at the correct value.
Okay. So again, everything means IBB registered valuer only has to be applied.
Yes.
Appoint.
Yes.
Okay. Now, one question is about ROC status not changed on submission of NCLT dissolution order, active to dissolved in master data of MCA. ROC asked no such notification from Ministry of Corporate Affairs. And point number 2, bank asked all the document for opening of VL account of CP. And point number 3, NCLT is not passing dissolution order irrespective order is passed as closed for order. So actually I'm not getting, have you understood
I understood the first point. That's a very practical issue because there is a lot of pushback coming from the ROC officers. So once you file a GNL2 to the ROC, they will have to approve this particular transaction. And I think some of the registrars are taking that point that there is no notification, etc. Under what powers do we do this? So that's a challenge, and I think that is sufficiently being taken up by the Ministry of Corporate Affairs. But I think beyond the point, a liquidator can't do anything. You'll only have to comply. So on appointment of a liquidator, I am going to notify the ROC in a GNL2 saying that a liquidation process has got commenced. So from active, it will become to liquidation. If it doesn't happen, I keep on following up, create a trail. Okay. Once the liquidation is completed, a dissolution order comes to my hand. I will then have to give it to the ROC saying that this is a dissolution order passed by the adjudicating authority. Kindly change the status and strike off the name from the records. If it doesn't happen, I don't think beyond reasonable effort the liquidator can do anything.
So there is a process time which has been taken by the authorities.
Absolutely right. And I think the last point in this was the NCLT has heard and reserved for orders, but the order is not come. So unfortunately, in some of the cases, we've also experienced 2, 3, 4 months of delay. However, as you can ask your legal counsels to again mention the matter, and the NCLT would oblige in passing an order.
Last question for the session. Can we distribute investment in unlisted equity shares as such to shareholders since these unlisted shares are not sellable or there are no buyer exists for the same?
Yes, so you can assign this in consultation with the corporate person. As I mentioned, these are not readily realizable. It cannot be advantageously sold currently. So they would want it to be assigned. But however, you'll have to do a valuation of that.
Okay. So
because in the garb of this transfer, if an undervaluation happens, the liquidator may be hauled up tomorrow by the income tax authorities. Because the corporate person is going to say there is no value, it might be 100 crore investment, you never know.
So I have received third lot of questions, which are 2, 3, 4 further more questions, which may complete in next, say 5 minutes. Can we take, Mr. Avin?
Yes, please. Yes, please.
So if one of the asset could not be sold in time and claimants do not want to take it in the satisfaction of their claims, what course of action is left with us?
So it's a time-bound thing, but however, if you have not sold, so within 270 days or 90 days, you will have to call for a shareholders meeting every year and file an annual status report. And you'll have to tell them why the asset could not be sold, right? I mean, even in a normal forced liquidation, where the time of 1 year has been given, we go for extension of time. And we also say these are the reasons why the liquidation could not get completed. Similarly, in a voluntary liquidation, if I am unable to sell the asset for whatsoever reason, I feel the price should be X and the market is right now not giving the price. Maybe the current situation with the Russia-Ukraine, I may think it fit to wait for 2-3 months. I may go to the shareholders at the end of every year and tell them so.
Perfect. What happens in case when the CD in VL not transferring the funds from old account in the new account.
See, all the money, all the accounts are under the control of the liquidator. I don't see any challenge why that should happen. Once you've given a public announcement, notified, the liquidator himself is the signatory. So I don't think there should be a challenge as far as that is concerned. The banks should oblige you. In case they don't oblige, finally you'll have to go to the adjudicating authority. But I don't think after 5 years of IBC we'll face the situation.
Okay. Say 1 year ago, rupees 1 crore inventory has been sold at 50% of the value. Then would liquidator nullify or cancel the said undervalued transaction?
So the liquidator will have to satisfy himself that this was an undervalued transaction. That inventory which was worth 1 crore, probably the market value was 95 lakhs or 80 lakhs, which was sold at 50 lakh rupees. So in that case, yes, he will have to make an application to the adjudicating authority. This is nothing but siphoning of funds. So the funds could have been siphoned off by the working directors who are not shareholders in the company. So if this money comes back, it would then go to the shareholders. So this is an application which the liquidator will have to make. In the case of an undervalued transaction, as a best practice, just to say that this was undervalued, you may also rely on an external valuer who is going to give you a report. Otherwise, it will be a long litigation in the NCLT.
Perfect. Again, it depends with whom this transaction has been made.
Absolutely, absolutely.
The latest case of Reliance and Future case, could you please explain what has really happened? I don't know whether in this limited time period is it possible for you to explain that.
So I think briefly what I do understand of this case is Amazon had invested in Future Retail, not directly, because this was a multi-retail format. 100% FDI is not allowed. So it invested in a company called Future Coupons, which indirectly held, I think 9 or 12% shares in Future Retail. So that was Amazon trying to gain access to Future. Thereafter, I think after a year, Future and Reliance entered into a deal where they were to amalgamate some and merge some 17 odd companies of the Future group and then sell it to Reliance. So basis this deal, when it was announced, Amazon went to Singapore Arbitral Tribunal saying that this is against the contract which has been signed, because in their contract it was mentioned that Future cannot sell this to X number of parties, and one of the parties was Reliance in that, which was very specifically captured in the contract, based on which the Singapore emergency arbitrator had given a status quo as far as this particular deal was concerned. Thereafter, I think a lot of stuff has happened, but last what happened was this particular deal, Section 230 compromise and arrangement, has been rejected by the secured creditors of Future Group. So basis that the deal with Reliance cannot go through. And now that Future Reliance Retail has already been referred by one of the bankers to insolvency court, so I think very soon you will have admission and bankruptcy processes will start.
Okay, great insights. Can we please amended timelines in voluntary process?
There is no need to amend the timelines. I mean, I didn't get this question.
Are there any amended timelines? That is what the question is.
Extended timelines you can always get.
So
Right.
there are no amendments in the rules?
There are no amendments. That's why I said whenever you get into a voluntary liquidation assignment, be sure to take all information, because in many of the cases, the reason a liquidator gets stuck over there is because of litigations and assessments. Because if, say, for example, the income tax has given a demand for 2 crores under an assessment, the company now wants to appeal. Now, if the company appeals, it might take another 1.5, 2 years. As a liquidator, I can't sit there, right? So this is what a liquidator any professional will have to look at before taking up the assignment.
So all information, documents to gather before starting the process is really the key to success, I can say.
Absolutely. Unlike a different process of CIRP where it is a default. So even if you don't do much R&D, it is still okay. But in this case, you might get stuck for 2-3 years. And if you're getting fees, fine.
Yeah. Otherwise, you'll stuck up in getting the documents and the timeline will get over.
Absolutely right. And there's a lot of compliances to do also.
Yeah. The last question now in this lot. What if the company has given unexpectedly high dividend to the shareholders within a period of 1 year before liquidation, while there was not sufficient funds available for paying the creditors? So means they have already given to the shareholders and they have not paid to the creditors, and the company is going into the liquidation. Would the liquidator recall the dividend?
So essentially, what I understand, in a voluntary liquidation, the assets are sufficient. The current assets, present assets, are sufficient to pay off the liabilities. I don't think that dividend should come into question.
Right. So if the current assets are not enough to pay the liabilities to the creditors, in that case,
You
what
cancel
if?
the process. You cancel the process. You can't be the messiah there.
Okay.
The assets are insufficient. As on the initiation, if the assets are insufficient to pay the liabilities, the process should not have been started. There is no question of me going 1 year or 2 year back looking into dividends. That's not my job.
So that cannot be recalled.
Yeah, the process started with the simple understanding in terms of Section 59, where the assets were greater than the liabilities.
Perfect. So we have covered all the questions which have been asked by the participants, and about 1000 plus. Rita will say the exact number, how many participants were there. So I can say that it was an excellent session, Mr. Avil. The participants are very happy and they have really added the value to their knowledge by sharing of your vast experience into this voluntary liquidation process. And you have covered all the questions and practical questions all have been covered and the solutions have been given. So on behalf of ICAI Committee on Insolvency and Bankruptcy Code, I propose a very worthy vote of thanks to you for taking the this particular session. Really thank you for taking the session, and we in future also take your support for our onerous job to share the knowledge to our participants and the insolvency professionals. Thank you, Avil, and I also thank our chairman, vice chairperson, and our entire people resources of IBC. Rita is there since beginning, and the arrangement which all the this resource people have done. So thank you very much, and thank you to all the participants. Thank you.
Thank you, everyone. Thank you, everyone. It's always a pleasure to be on the forum of ICAI, our alma mater. So, and kudos to the team for putting up a very, very good show. Thank you.
Thank you, sir. Thank you, ma'am.
Thank you, madam.
We have 2,500 people
Oh, wow.
live
Excellent.
watch.
Wow.
Yeah.
Excellent. So registered were around 1000, but then actually the people participate more
Yeah.
2000, because I had a talk with Rita in the beginning before starting how many are the registered people. So around that number. But excellent, Rita. Excellent work by the committee.
Thank
Great
you,
going.
ma'am. Thank you so much.
Yeah. Thank you, Mr. Avil. Thank you very much.
Thank you so much, sir. Thank you so much,
Thank you,
ma'am.
ma'am.
Thank you so
Thank
much.
you.